Good morning. Good morning, ladies and gentlemen. I have a feeling it's going to be a great day. I do. I really do. I have a feeling that today we're going to get all of our dreams are going to come true. We'll have to wait until we get some more people in the stream to really start going into our daily discussion, or else we'll just waste, well, only my time because I'm the only one here right now. So, in the meantime, I'll just go through some emails or something until I see someone come in. No. It's currently 22 degrees out here. It's getting a little chilly. Looks like we got a little snow coming in, actually. Wonder if we're getting a storm today. Yeah, all I gotta say is the market is going to. Well, right now the market's not positive, so we're just gonna have to wait for it to go back to positive. It's the same stories it's pretty much been for pretty much the last like week and a half. So yeah, we'll just have to see. Analytics. Let's see. Better. Again, good morning, everyone. We'll start when someone's actually here, which means I'm saying good morning to no one. Nada. Hello everyone. Give me just a second here. I'm trying to do something real fast, and then we'll get started. No. Maybe that's it. All right. Anyways, so yeah, welcome back. Welcome back. Same story as always. Same story as has been for pretty much a week, which is the market still, excuse me, still not getting enough acceptance over the 50 SMA to turn the market structure back to positive. So we're just going to be in the same boat as we were kind of yesterday and the past couple days, which is back in the waiting for the market to get acceptance over the 50 SMA to flip the markets into a long. Kind of thought, we would be able to do it yesterday a little bit, but ultimately we weren't, which just results in the opposite. So, and this is everything we discussed yesterday, so it's not like anything that's happened from yesterday to this morning isn't, somewhat expected to a degree. So yeah, right now, if we look at the market, same story as always. We go to the 30-minute chart, regular trading hours. Where's the 50 SMA? 50 SMA is priced right there. Move it to a pre-market chart. That tells us that pretty much the market is set up like this, which is bullish above, and it is bearish below. Bearish below. So, as you can see, yesterday, by the end of the day, well, let's actually kind of start from maybe like the beginning of the morning, right? So, yesterday morning, we pretty much said watch long up to that red line. And then once we're over that, we'll pretty much watch up to arguably as high as here, at which point the market will have to break out for the market to keep going, or else it can turn into a big top. If it turns into a big top, it will then sell back to the 50 SMA first, which would be there, etc. So all we really saw yesterday was the market shift above a level that could change market structure positive. Market then runs into sell signal, volume, weighted average price. That creates the top. From there, we're unable to sustain the move. As a result, we pull the market back to the 50 SMA to see if the market can hold above. It doesn't. It breaks down. Therefore, we wake up today and Connor puts on the screen that the market is not positive. The market is, in fact, in a neutral to bearish state. We will go back positive / more long bias the market when the market says we should try to do so, like it kind of did yesterday. So for the moment, we're not really long bias as far as SMA trend is concerned. The market is actually very interesting this morning because not only is the market below the 50 SMA, the VIX is currently, I think it is, let me double check. I think the VIX is actually below its 50. And VVIX is below its 50. So that basically means the markets are not making a whole lot of sense, which one could say is confusion. One might think, or one, like for me, I kind of look at, I'm looking at the VIX and I'm looking at VVIX and I'm looking at the market being down a little bit below its SMA calculations. And I say to myself still, Santa Claus, like, it's the only thing I can muster up in my mind that might make sense as to why we're seeing, call it, discrepancies in the market. So, again, when you look at the market, almost always, if the market is below the 50 SMA, the VIX will be breaking out or the VVIX would be breaking out. Neither of which are happening, which tells us even with the market being down and below the 50, the markets aren't really scared. You know what I mean? So it's like trend isn't positive. It's on the neutral to bearish side, but there's no one's like truly confirming the breakdown or the fear, if you will, which then becomes, is everyone just too optimistic about a Santa Claus rally? Therefore, we're just not fearful of the drops that we're seeing in the market because we anticipate that we're just going to end up buying it up anyways, regardless if it goes down or not, somewhere around Christmas and after Christmas. So therefore, we're not really hedging downside risk nor being fearful of what we're seeing go down. That makes sense to me. But at the end of the day, my thoughts don't actually matter What only matters is the market and what it says. And right now, it's saying that we're in a neutral to bearish state, but we don't have true fear and confirmation that the market wants to go down. So I'm not going to be that bearish today for the moment. Even though we're on the neutral to bearish side, I'm kind of in the markets aren't really telling me to be extremely bearish, right? Just because the price of the market's below a level, there's two other markets that don't really suggest to me that it should be that bearish. So I would just need to be proven wrong, which is the market just falls off a cliff. Or I will listen to what I'm seeing here, which is no one's really hedging downside risk in the market right now, or they're not concerned of it. Tailwind risk, and or there's not a whole lot of fear with this drop. So, one could just argue that this is all just kind of like a little shake and bake that does end up still getting bought up. I mean, we'll see. So, yeah, I mean, for me, I'm probably just going to be optimistic that the market gets bought up. But at the end of the day, that's the dangers of, trying to create your bias outside of what the market says. Like I said before, if we go look at the SPX, right, the market went to a bearish to neutral market here. So you could have been like, oh, well, I think that's the bottom, or I think that's the bottom, and I think that's the bottom, and I think that's the bottom. And the market still hasn't transitioned positive, right? Whereas, yesterday was the first time we saw the market structure move above the 50 SMA in quite a bit, a couple weeks, if you will, or a week and a half or whatever it is. So yesterday was like the first true momentumous day that we've seen within like a week and a half in terms of upside, but it just wasn't strong enough to hold above the SMA trend. Which, granted, we did kind of talk about there was a good likelihood it wouldn't, and if it didn't, it'd roll back and whatever. But those are all just the what ifs. So, like I said, the simplest thing we can always say is that you can be, that's really it. You can be long bias above the SMA, but if it starts to come back below, you have to reduce or take off your position. So, we'll just kind of talk slightly about yesterday. Yesterday's recommendations for the market on our stream were to watch the market long to here. Once it got there, reevaluate. Because the market is bearish when it's below and it's bullish when it's above. So we essentially went to the party and had to decide if we get let in or we get kicked back out. So we first take the market long to the 50 SMA. Then we evaluate, is it strong enough to get over in the immediate or is it not? At the time, we determined it was not strong enough to go up in the immediate, so then it would pull back. And in fact, it does pull back. All right? Et cetera, et cetera, et cetera. Later on, we start getting back above the 50 SMA. This is at the next point where I say I add a little bit more long to the market because we're going over the 50 SMA. So it would be long bias. All right? Market, in fact, goes up. When we get in, we say, hey guys, we're going to watch the market up long to here. Once we get to here, this is the sell signal volume weighted average price of the previous, that's the sell signal. I just know too much in my brain sometimes, but so we get up to there. We mentioned this is the sell signal volume weighted average price of the previous sell move. Market must get above here to further squeeze shorts. If we don't, then the result is it's going to have a big top, and the first thing would be to sell it back to the 50 SMA, right? So we essentially mapped off, I would say, like literally 90% of that price action for you before it happened, during its happening yesterday. But I just want to kind of make sure everyone's on board, right? Because we did get kind of excited and amped up about the market getting over the 50 SMA yesterday just for it to basically shit the bed, right? That being said, during the time of getting excited and walking everyone through it, we did mention everything we possibly could to keep everybody as informed as possible about in my opinion, like every single scenario and why and when and what would happen when it happens, which is we got bullish over the 50. We took it long to the price target we said it'd probably go to. We said then it has to break here or else it turns into a big top because this is a mega resistance point. If we top, we sell right back to the 50. If you go below the 50, you cut your position, right? So if you think about the risk to reward in terms of that structure, it's really good. Now, the move wasn't great, but let's just think about it, right? When you use the 50 SMA as your entry and exit, bullish and bearish shift point, you can find yourself getting involved in a move right around the 50 and the 50 SMA. If the market fails, look at where the 50 SMA is right there. So what's your loss? Your risk is very defined and it's very small. Now, if someone was buying long over the 50 SMA and they're using a previous low as a stop point, then you would have to get in, then let it roll, go below the 50, which is bearish, so then why would you be long bias anymore, and then let it drop all the way out to your previous low, then stop you out, and then you just take a loss. In that situation, not that it would always happen that way, but the bottom line is when you use the 50 SMA, it's an algorithmic point. And in instances where a long or a short does not work well or go on for an extended period of time, then the market doesn't have enough time for it to change the calculation of the SMA trend. Therefore, your risk becomes extremely defined and limited in that regard, which is just like we have it here. Let's map it off. So this is where the 50 SMA is at, give or take. I'll even do another one right there. We'll go into a 1 minute chart. All right, and we're going to zoom out to yesterday. All right, where are we at? There it is. All right, so let's just think bullish above, bearish below. So what was the first long target on the day that we were suggested to here? Then what did we suggest? Pause, be careful. There's not enough momentum for the market to break this level out in the moment. What happens? Market goes down. Why? Because the market is bullish above and bearish below. It's not above with enough momentum, then it's just basically popping into and having resistance. All right. We do what? We bounce back to. Not enough momentum to break out in the immediate. So what does it do? It pulls back again. We then bounce back up. We start to get above. That is breaking over the 50 SMA. Those that don't watch the 50 SMA would then just assume this is just a high of day breakout based off of resistance that was randomly created here on the day. Whatever. No. That's the 50 SMA. We are controlling price action and structure of the market around that SMA calculation. When the market breaks over the SMA, algorithms, computers, me, and people on the stream will say, hey guys, the market is getting positive. This could be a long opportunity. But you also know what? That the market has to maintain above the 50 SMA for it to stay a positive market. If not, and it goes below, that's back to a neutral bearish state. All right. So, yesterday's recommendation. Long to here. Watch essentially resistance here. Then be long bias above. Okay? Then we suggest adding an anchor VWAP at the break spot of the 50 SMA. Why? Because if the breakout is going to last on the intraday scale, it normally will not go below the 1 or the 5 minute volume weighted average price. You can think of it like this. If the market is strong and the market is breaking out and the market would continue, then why would it not hold the volume weighted average price of the breakout? Or worst case scenario, not hold support above the SMA calculation point. So let's explain. Whenever we have a breakdown or a breakout on the market as it relates to the 50 SMA, you add a volume weighted average price to the break point. That will become your first volume weighted average price trend calculation that we follow for continuation. Ready? Be long to here. Watch resistance. Breakout over here. Market we're going long. Add a VWAP at the breakout. That becomes your trend continuation. Ready? Hold, hold. Then where's the failure? Right there. Market slide. Now what you want to understand is that when you add a VWAP right around the breakout level, all right, you're essentially tracking the volume from the breakout and everything up. If the market's going to continue bullish, then it's not going to, or most likely not going to, take out the VWAP of everyone getting long over the 50 SMA. So you can essentially assume and you can think that this VWAP is that immediate 1 minute trend and all the volume that's buying into it and above it and whatever, that's their stop out. Like that's where they're priced at, right? So we already know that if we're tracking the VWAP from here and the market's going up, that if we start to go below that blue line, then a lot of people that are participating on this long are already underwater, right? You know what I mean? Now, someone might say something like this. They might look at this and go, "Oh, so this was a bull flag, but then the flag failed, so that's the pattern and that's the breakdown." Right? And arguably it's true, but I would just read it a little differently. Whereas I would take the VWAP of this breakout level and I would say this is how we are controlling and developing the lows within that trend. As a result, all said and done, hindsight 2020, it created what arguably looks like some sort of flag that ended up breaking support. Right? So again, it's for me, it's not about looking at the pattern so much as in this instance about understanding the key volume trend of the market and what we're really trying to do in real time. Yesterday, arguably, what we were trying to do as the bulls is we were trying to establish a breakout over the 50 and hopefully kickstart the market into a long bias buying algorithmic operation. We weren't able to do it. Since we weren't able to do it, everyone getting long on the market has to get stopped out, or does get stopped out in this instance, right? Now, you could just simply say that, oh, well, the market's just not strong enough. We tried and it went up. Yeah, I mean, you could think of it that way too. I just might like to go in depth and think about all the other little nuances that, a lot of people probably don't look for. So there's that, right? And so all that happened yesterday is we took the market long. We tried to break it out. We were unsuccessful. That's okay. Happens all the time. You just have to develop those rules and things in real time to understand that. And we discussed all of that, right? We were sitting here with you, walking it through it. We literally said, hey guys, anchor a VWAP here. What's going to happen is if the market does not hold above this, it's going to break down and it's going to go like that. It's going to go straight back to the 50 SMA. And then it's going to decide if it wants to hold or if it wants to go back to bearish, right? And it's the same thing. Ready? Watch. We repeat the same thing. Now we could take the VWAP and we go to here because this is a breakdown, right? So it's the same level, right? The same level that you use to break up the 50 would then be the same level used here to break down the 50. And we would repeat the process, right? So if someone's like, oh, I want to be bearish, I want to be short, ready? So here's the story. So we break 50 SMA down. Okay, market can stay trending downward, right? Or it's more likely to stay trending downward with downward momentum unless it breaks over the VWAP and starts to stop out everyone chasing the short move from the 50 down. And as a result, we will most likely squeeze them back out to where? The 50 SMA. Right? So we literally saw the same pattern repeat twice yesterday, which was a breakout that failed to continue, took out the 1 minute VWAP of the breakout, stop lost everyone back to the 50. Then the market decided, actually, we don't want to hold bullish anymore. We want to flip back to a neutral bearish state, so it went below. Then what do? We anchor a VWAP to that breakdown spot, arguably. And if the market maintains below, great. If it doesn't, we reset the 50. So that's a strategy that I use anytime the markets are trading around the 50 SMA, so that I can basically, for simple terms, know the trend, and when and why we stop out, the price target of the stop outs, and things like that. So that pretty much leads us into today. What time is it? 9:19. I'm going to delete that ish. Go back to the SPY. All right, so that leads us back to where we're at today, which is in terms of SMA calculation, where are we? We're below, right? So if you think about where the breakdown is, right? I don't disregard the VWAP for now, but whatever, right? So we're below the whatever, like we're down, okay? So we already know that we're below the 50 SMA this morning. So the market has two options. It can go up or it can go down. That's it. And it literally cannot trade sideways. Sideways never happens. Sideways is always an up and down. No matter what, the market is always going up and down to some degree. It's never truly flat. All right. But that being said, market can only go up and go down. So if market is on neutral to bearish side, right, then it either has to just keep going down, or eventually it would then have to go into an uptrend. And if it's going to go into an uptrend, what would it first have to do? It'd first have to go back to the 50 and then reestablish above the 50. So anytime you're in a downtrend or the market is below the 50, you're always thinking to yourself, can go up and down. So either the downtrend has to continue, and if it doesn't, what's the opposite of a downtrend? An uptrend. But if we're not in an uptrend yet, it would then have to first go to the level that dictates an uptrend, etc. So for me, I look at the VIX this morning. All right, so let's bring this down. And this is what I was talking about earlier. Look at the VIX is below the 50. So no one's fearful of this drop. At least it's not being expressed, right? So does that just mean we're just going to buy the market up? That's what I'm thinking, right? And I know it sounds silly, but I could very well be wrong, right? But that's what I'm saying. When you look at these things, again, this does not make sense what we're seeing. Normally things, like I tell you, normally things make sense. Right now, none of this is adding up. So I'm not even confused. I see it, but I'm confused in the sense that this is not normally what we see. So what is the market really trying to do here, right? Like, why are things so disconnected? Like is the market really that confused? Like, what's going on here, people? So we gotta get some things back into check here on the market, because again, it makes zero sense. I mean, it kind of makes sense, but it still makes zero sense. You know what I mean? Perfect example of the market, right? So the only thing I keep going back to is the market is on the neutral to bearish state, but nobody's fearful. No one is hedging downside risk right now. So one can only draw the conclusion. Either the dips are just going to get bought, or no one's fearful and they really should be, right? Like, that's what I'm saying. Like, one of them has to be wrong. So who's going to be wrong here? What market's wrong, right? Is the S&P 500 wrong? Everyone betting bearish on the market's wrong, right? And everyone betting volatility is correct, right? They cannot coexist like this for a very long time. They will correct. So there's a disconnect going on here, right? And what I'm thinking is, and I keep going back to this, is the Santa rally, and it's, in Christmas again, we always tend to see rallies around then. Is this time different? Maybe, but so far the volatility market is suggesting to not be scared of this pullback this morning or this overnight drop, which is crazy, because normally a move that we saw from yesterday's highs all the way down to here would almost certainly cause the VIX to react in a positive manner, or for people to at least start hedging volatility a little more. These things could change at the open, which I'm very intrigued to see today. But again, it makes me scratch my head a little bit today. So it's kind of interesting. It's actually probably one of the more exciting environments I've seen in a little while, just because it's unique. It is very unique. We don't normally see this. So it's a relatively unique experience that I get to see today. in the market that I don't normally see. So it's kind of, like I said, it's kind of a cool thing. Regardless of what happens, I could care less. It's more of a great learning experience today. Because normally I would just come and be like, oh yeah, VIX is positive, markets whatever. Like, oh, that makes sense. Like, no, like this kind of doesn't make sense. So I'm hoping that my intuition is correct, which is that Santa Claus rally. Maybe there's something behind the scenes. We're gonna pick the market up, and it's no one. We'll see. Yeah, that's all I got to say on that. I guess I'll just keep repeating myself there. I'm so happy you guys are having a good morning. I understand that you guys were all the people in today's stream. I know you guys were cooking dinner for your significant other last night, and you managed to cut off both of your hands. So therefore, this morning, you're not actually able to use your keyboard. All right, it's I feel for you. I'm sorry. I hope you have good insurance. I would buy you a new laptop or a new keyboard for Christmas, but then you still wouldn't be able to use it anyway. So, good morning. Now remember, I am optimistic that we'll somehow still pull like a Santa Claus bouncing bullish move out of the wizard sleeve this year. But they're making it very, very. They're making you want to deter from that thought. When I say them, the market, the people that really control the game. But yeah, I mean, you guys should not be surprised. I mean, it's literally all on screen. Everything's been discussed since yesterday. You know when we should go back to bullish. You know why the market is bearish, etc. Now, mind you, the cleanest entry to have been bearish would have been basically like right there. See the last time the market dropped below the 50 SMA, that would be your bearish entry. And so far, you've never been stopped out, right? As far as the 50 SMA goes. But anyways, that's that. What else we got here? Are we looking at maybe Bitcoin? So you guys know as well as I do that Bitcoin did kind of bounce overnight, but I actually haven't mapped off the Bitcoin prices in the past couple days, but I'll go ahead and do that right now. I mean, for one, we don't even. I mean, yeah, There's always so much to talk. I mean, there's so little to talk about, but so much to talk about sometimes. But yeah, so I really do not think that Bitcoin is going below this low in a meaningful manner. Meaning, I don't think we're gonna get another slide. If anything, it'd be like a fake out, and then it's gonna go back up. Yeah, I totally see Bitcoin in some fashion or another holding around this low, whether we come down a little more and then we do something like that. I don't know if we're form a head and shoulders pattern, or if we're gonna form a head and shoulders pattern with a weaker right shoulder, or it's gonna go above. Well, actually, I kind of do. What am I talking about? Yeah, I don't know if it's going to form a head and shoulders pattern, but one thing I do know is that, yeah, I do know if it can or can't, but it just depends really what the market wants to do. But yeah, I don't think we're going below this low really anytime soon. I do think we're going to kind of hesitate, keep doing what we're doing, then maybe bounce a bit later. And then maybe we'll roll down later. I just don't think we're going to go down below that low in the immediate, personally. And if we do, whatever, so be it. You guys know that we were supposed to enter a bear market on Bitcoin. Well, supposed to. I thought we were supposed to, and we did, in fact, go into one. So I guess that means we were supposed to. But I can't say we for sure were supposed to before it happened. It was just expected. So yes, we did enter a bear market on Bitcoin in October of 2025, which is the time expectation that we had preached about for a couple years. That's happened. So yeah, we're just in a bear market for Bitcoin. I know I keep repeating this over and over and over, but pretty much one day we will maybe not be in a bear market, but that's probably not going to be for quite some time. So just get cozy for maybe at least a year, 2 years for Bitcoin to be in a bear market. Pretty much it. Again, I'll be repeating that until we go into a bull market. And then also, never in the history of Bitcoin has there ever been a, well, maybe, yeah, pretty much. Yeah, Bitcoin has never gone into a bull market without first clearing above its previous bear market volume weighted average prices. Just an FYI. Market's open. And what's happening? I don't know. I can't see anything. Where's my chart? There it is. The market. What is going on? It's going all the way back up. Yeah, well, also, just an FYI, if the market is gonna, basically, this is the target for the market back on the long at 677.58. Let me go to regular trading hours. Yeah, give or take. It could be a little. Wait, hold up, something's off. I might have that wrong. Sorry. Yeah, the long target right now is arguably as high as the 50 SMA. Because again, the market can only do two things, right? It can only go down or it can only go up. So if it's not going to last in its downtrend, then it does what? It tries to go into an uptrend. Well, we know that the uptrend starts over the 50 SMA. And we know that markets can remain in a downtrend if below the 50 SMA, right? So anyways, our target's about to get hit in a second. When I say our target, right? Our targets are always the same, right? We repeat the process over and over and over, right? So this morning, did I say, hey guys, we're going to take the market long to $677.58? No, not necessarily. But you know that if we're not going to remain in a downtrend and the market wants to try to go to an uptrend, what does it have to do first? Go to and through the 50 SMA. That's why it's a logical price target, regardless if you think the market's going to stay in a downtrend or if you think it's going to go in an uptrend, because it's the point where that decision gets made. So right now, in real time, algorithms and computers are going, do we want to flip the market positive or do we want to keep it negative? So what do? Let's go look at the market internals. Are the market internals suggesting bullish or bearish in this exact moment? To be honest, I don't really like the way they look. I could be wrong, but right now all we have is like basically flat action on the Magnificent Seven. If the Magnificent Seven start to pick up here, start putting in some green candles, then no doubt the market's going to break out and go, like 100%. But we do see that the New York Stock Exchange has a couple green moves. We can see that the S&P 500's got a couple green candies. But ultimately, if the market is going to, in an easy manner, break this 50 SMA out, and we're going to trend up, and we're going to break out, and we're going, Santa Claus is going to dump his big old sack of gifts right on our forehead. Love it when he does that. Then yeah, that we need to see the Magnificent Seven start to perform. Right? Now, remember what we talked about. Remember this morning, right before market open, we're like, guys, I don't think it makes sense to be fearful of the market here. We shouldn't be fearful of this drop. It doesn't make sense, right? I could have been wrong. So far, it's right. But why was I thinking that? Because this morning, literally, since yesterday, no one is hedging downside risk in the market, right? And if you look at the VIX, right? Let me bring up the VIX here. Look at the VIX. The VIX is below the 50 SMA. Both statements cannot be true at the same time for a long period of time. The market will correct. So you got to ask yourself, the market peaked yesterday, rolls over, drops out, goes down all morning, and somehow no one's fearful of that? No one. And when I say no one, I'm sure some retail were, but people that really watch volatility and understand it a little deeper would go, why is no one fearful this morning? I mean, maybe they'll become, but why would nobody be fearful of this huge drop overnight? It's weird. So, that's kind of playing into this thesis of why we would still see the market get bought up, right? And then obviously the target would just be back to the 50 SMA, right? So as we already discussed this morning, one second, let me just make sure I'm correct here. So we got the 50 SMA, and actually I'm going to add a little bit more to my position here just because we're getting over it. I could be wrong, but I got to take on a little bit of risky magoozies here. Maybe I should wait for a dip, but whatever. I don't even care. If it's wrong, it doesn't even matter. Again, the system repeats over and over and over. And the risk is pretty limited, you know. But anyways, so all we can do is just hope that Santa Claus helps a brother out. I mean, it's a pretty straight shot up, you know. So there's a lot of untested GPs in the bottom, but it's kind of one of those things where, again, you know, we're breaking it. If they want it to go, they'll make it go. If they don't, they won't. It's pretty simple. But yeah, like I said, there's just not a ton of fear in the market, so I just don't see why we should be betting extremely bearish this market in the moment versus just still being, you know, optimistic. You know, if the market was really meant to go down, then we should be seeing a whole lot more fear in the market than what we're getting right now. I'm so excited you guys came to hang out in the chat and talk. Love it. Yeah, so let's just bring up the, wait, I gotta check the SPX real quick, and I gotta check QQQ, because QQQ would be nice to see see, okay, look at QQQ. So QQQ is actually already positive, so that's a good sign for our rally. So if you look at QQQ, you can see QQQ is established over the 50 SMA already, whereas the SPY is like trying to get through its right now. And now you can actually see they've kind of formed like a flag pattern, right? So see how so again, remember, we don't really look for patterns all that much, but when you're looking in the right place, you'll start to notice them. So see how the market came down, bottomed, and then as it starts to get over the 50 SMA or try to, we know that's where the market can turn bullish, and then it creates like a flag pattern, and now it's broken up. So you will notice patterns more frequently that are actually correct when you are following that SMA structure more closely, if you will. Oh, come on, market. Don't be lame. Give us some action, brother. See, like I said before, what's happening here is we have actually, so see, look at this drag. So the Magnificent Seven are dragging the market a bit here, preventing the SPY from just rallying out. But so far, so there's the back test to the 50. So just like that, there's our back test already. So this is where the market has to maintain essentially. So we just broke out briefly. So this is where the market would need to maintain to flip the market positive, or else we could just still be in this kind of choppy, undecided market, and that's how that's set up right now. And right now we don't have the Magnificent Seven moving positively for us to help the progression of the long move, unfortunately. So I just de-risked on that long because there's literally no point. I could just, like, I literally took it. If we could hold that and start shooting up, great. If not, then I'm just going to de-risk. So just de-risk that little long entry there, and now I'll just wait for the market to reestablish itself, hopefully, at some point. And if not, no harm, no foul. Small loss. And I still have some long. I added up more there, so there's no point of holding if we're not holding exactly, right? Oh, and actually we have a gap up today too. Oh, that's right. Totally forgot about a couple of those things. So we have a gap up. So let's just see. All right, so we already hit our 161, but I remember we gapped up the other day, so I want to check that. So we have yet. Ooh, yeah, we're looking. Oh, wow. Look at the SPX there. See, whoa, what am I doing something wrong? Oh, I see. I see what's going on. We've already flipped the SPX positive. The levels on the SPY are a little different, but that's okay. So, remember, we had this mega gap up yesterday. So that tells us that... Oh, wait, hold up. We did hit the 161 target yesterday. Huh, I thought we didn't. Interesting. Okay. So that becomes a new level we got to get above. And if we do, we can X 261, 461s, and 261s. Let me check our sell signal volume weighted average price now. All right. So, okay. So we're above that now. That's good. We got to get a ball. Let's double check. Hold on. Yeah, it's that one. My brain. Here we go. Yeah. I like the way the SPX is looking there, just because it just looks decent. What am I doing? Settings. Oh, I see why. Yeah. Again, we're not getting so far the easy bullish movement we would like from the market. Market internals aren't performing exceptionally well for the moment. S&P issues are not doing amazing. Doesn't mean that we can't rally the market, but we would like these to perform a little better. It would help us really rally this market out right now. Yeah. And basically we have to get over the price of 679.77 for a true big squeeze to take place. And right now we could just be holding the 30-minute lower high structures. So yeah, there's that. So that's another thing, which is right there. So that's going to be the next kind of key volume trend I'm following right there. 678.33. We start getting over 678.33. That would be better, obviously, because the price would be going up. Again, still holding some long here. We're over that 50 SMA. I did deleverage a little bit because I was like, let me just see if we're going to establish a little more. So, but I still have some long, and I want to add some more. I would like to see us break this 678.33s. I could have already managed that better, I'm seeing, but, psychology. But I already said, what's the point of being fearful? That's right. So even the small little blip, again, there's really no point. Because, again, the market isn't fearful. No one's hedging downside volatility, so don't let small price action deter you from how much you already know, which is you should just be long. That's right. No one is hedging fear, Connor. No one is fearful. Could change, but it hasn't. So don't be fearful. Got it. Thanks, champ. Thanks, Inner Logic. Yeah, so yeah, I mean, did you guys get all that? Have you guys gotten all that we're putting down? I have noticed one thing that's really awesome about our stream is that the retention rate is significantly high, especially in comparison to the average YouTube. I don't want to say that's entirely true, but a lot of the finance stuff. I've noticed that our retention rates on our stream are extremely high. I assume that's because our information's terrible and we're always wrong. And where we say the market's going to go never goes there. And when we say it's going to be bullish, it's never bullish. I imagine that's why people probably stick around for so long, because they love getting fed terrible, terrible information. Let's go rally it. Hit him. Hit it with the two-step Magoo. Could have done a little better, but that's all right. Okay, like I said, we're just in the long. We're just in the long. Um, I should be being a little bit more smart. Let's practice what we preach, which is what? Hold on, let me. I got to do this two ways. So we got to look at. Well, I can't do it that way. I got to look at the SPX. Or wait, I got to look at the SPY. My bad. Sorry, brain's moving fast right now. Um. Oh wait, let me look at this. This is getting good. Okay, that's good. That's good. That's good. Lit. All right. So we're gonna look at now the 1 minute. Look at so ready. So this is the break. I kind of thought we weren't gonna hold this back test. That's why I deleveraged a little bit, but that's all good. Um, so now we're gonna hold. Not now we're gonna hold. We're gonna look at the volume weighted average price of the breakout. So ready? This is ready. That's the 50 SMA. So just the same thing as yesterday. Like, hey guys, add the 1 minute view app and that whole little spiel we did this morning. Ready? Here's your break of the 50. There's your back test. Now we've kind of pushed along off of it. So what are we doing? We're tracking the VWAP of that back test and break and go. We also want to track the kind of, see the break over this high right here, the break of that high. And you see how the candle right there gets abrupt? We also want to track that one. And then this is what we're going to say. This is our 1 minute volume weighted average dip buy trend for the breakout. So any dips down into that, we want to be long bias into for the moment, in the hopes that this long is legit. If the long's legit, that pretty much means the market's going to hold and go, right? Or worst case scenario, it's just going to hold above the 50 SMA and continue grinding up for the day. That's pretty much what we're hoping for right now. So, yeah. So it's my assumption that to some degree, we're going to see the market pull back to that box that I just put on the screen. And it's our fingers crossed, our pipes are packed with hopium, ready to go, that it just holds this, and then we just start ripping off a rally, and that's all we can hope for. But at the same time, look at the freaking S&P issues aren't doing what we need them to do. Look at that. They're like trailing down and sideways. The Magnificent Seven are hardly getting bought. The NYSE's kind of moved a bit. So again, it's another interesting day in the sense that we're not getting extremely long bias buying momentum right now, but still the market's going up, right? So I'm wondering if they're trying to disguise the move so people just don't see it, right? You know, make the market internals look terrible, but we're still going to rally this market off, right? And try to keep people out of it. Like, you know what I'm saying? Like, the market loves to play games. So for one, the market was not fearful this morning. So it's like, why be bearish? But now the market's back to positive. We're rallying the crap out of it so far. But visually, the participation of the move is not substantial by any means, if you ask me. So who's doing it? And why? Don't know. But another thing is, it's a head scratcher. Like, I mean, hold on. Let me rephrase that. Let me see. Because we are, hold up. Oh, did I delete that? I did, but I think that's right. I mean, the market internals on the Magnificent Seven have appreciated to levels that would be momentumous, but the patterning doesn't look substantial. Yeah, that is a little lame. But that being said, I'm not going to say that I mean, it doesn't matter. I mean, it does matter, but again, it's like, okay, look at that green day. Look at this green day on the NASDAQ, and like, I mean, granted, I'm not looking at every single, oh, that's another thing. I wonder if they're doing a broader market move right now outside of things that I typically watch. That can happen, and that's where I'm wondering if the rally is really taking place for the moment. I mean, Nvidia's putting in a good day. Apple's not even positive yet. Google's trying. See, look at Google's trying to get positive, so Google could be entering a long move today. You see how Google's been in a downtrend and now it's trying to flip. So if Apple could start participating, if Google could participate more, That would be good. Nvidia's putting on a lot of gains for the market today based off its movement. So a lot of the gains are just basically built off the back of Nvidia is the way it would appear. Amazon's positive. Netflix is trying to go positive today. So there's a couple big name stocks that are right on the levels that could see AMD. AMD flipped into a long move. Ready? Watch this. So we go to AMD. Watch. Ready? Highlight that bad boy. Go to the extended trading hours. Where did the market start to break out? Ready? Look at it. It's right there, right? So like look at yesterday. Ready? Market. Back test 50. No. Over. Break. Go. Right? So the system is really the same across the board for most things. So like as the equities in the market start to flip positive, the market starts to flip positive, things start to move. But yeah, we could definitely use the help of a couple other big name players here. Netflix would be a good one. Google. Yeah. Anyways, so that's that. Wow, not one person wanted to chat today? That's crazy. That's crazy. I guess you guys really don't want our stream to become popular. Why you do that to me? Why you no chat? Why you save all good information for yourself? Hey, good morning, Mike. How are you? It's good to see that your fingers grew back like a lizard. Just kidding. I appreciate it. So yeah, again, guys, we're just I am long bias. I actually haven't even changed that ticker scroll thing. But anyways, I'm long bias. I have UPRO on long, 3x leverage long S&P 500 in the hopes that we do in fact actually start a buy move over the 50 and the market takes off. Does it happen? Don't know. But every time the market goes over the 50 SMA, that's how I think, and that's what I try to do. But hell yeah, ready? Ready? See, do you guys remember what we just said? Right? We're gonna anchor the VWAPs to that breakout candle and the 50 SMA candle, which is right there, give or take. And we expect what? We're going to pull back down into these VWAPs. I mean, it's also you could also call that like a 10 or a 9 SMA pullback. That's true. But, we were going to pull it back to about there. This is where the market has to hold in this area, and we can force the market into a long, right? Whether it be exponential or not so exponential, but that's what we're trying to do behind the scenes. The worst case scenario for us is that the market does not hold and we then reset the 50 SMA just like you saw yesterday. This is the exact, literally, this is the exact same exact pattern as yesterday. It looks different because the candlestick and the formation, but the levels and the approach, the meaning, it's all the exact same, which is market flipped over 50 SMA. Markets can be potentially transitioning positive. We track the volume weighted average price of the breakout. If the market sustains, great. If it doesn't, worst case, resets 50. Same pattern, repeatable every single time in the market as the market comes up and above the 50 SMA. This never changes. It's always the same. Now, the patterning and how the market forms up can be different, but the approach, when, why, how, it all stays the same. And it repeats because it's a constant. It's a simple moving average calculation. It will be there for forever. The pattern of the SMA calculation is, it changes, but it's always the same. It's just the 50 SMA. It's not a bull flag that has three peaks and 3 troughs versus a bull flag that has 5 peaks and 5 troughs. No, it's just one line. And whatever the price point is, above, great, below, whatever, right? Boom. There you go. How does... The market's not supposed to do that. What is it doing? Why is it going up? Why did it hold a pullback in that green box and then start to move upwards? I just don't understand. What is it doing? Anyways, so yeah, that's that. Come on, market, just be cool. Like no one, like we've done a good pullback for the past couple days. Like just give us just give us a, just squeeze the shorts. Like we don't even need to go on an extended rally. Just like all we got to do is blow out the shorts from the past week. Oh, we're getting close. We are getting close. We are so close to squeezing them. And when I say by that, it just means that we're close to the level. I have no idea if it's really going to happen, but I just know that this is where things get interesting again. Um, we'll see. Now remember, that's another thing too. Is this level here? This look at you see where we're at. We're right on the sell signal VWAP, right? So when we say this is a sell signal VWAP, right? This whole move, right? This breakdown, that's bearish, right? This is a sell signal operation. That's what we call that. You could call that a bearish trend. You could call that a bearish sell-off, a bearish move, a sell signal, selling algorithm, selling operation. However you want to define it, that's fine by me. I love to think of them as selling operations, algorithmically programmed selling operations, because I just know that's what it is. Because I just know that the market is mainly programmed with algos, and a lot of it is done by computerized trading. So when these things in real time read calculation levels and go, oh, this is bearish, their programs flip to risk off as opposed to risk on. Therefore, programs would start, allocating proportionately or properly based off of whatever their program or their portfolio asset allocation models, and that would start to go risk off, especially in the short-term trading firms or short-term trading practices and what have you, right? So we know behind the scenes programs are changing and algorithms are changing, right? In this whole bearish move, its key VWAP is right there. So if we start to clear that, that's where, as we discussed yesterday, shorts will start to get really squeezed. So that's when the chart pattern will change to this, arguably, right? So we're knocking on the door of that. I hope it happens today, because if it happens today, then great. I get to see it today with you guys. But as we said before, I don't have. Well, I have a phone call coming in. 1 second. Okay, sorry about that. You know, I'm not only a YouTuber, I got to answer the phone calls, when the president of the United States calls, I got to answer, okay? Connor, you know, are we in a buy signal or not? We're not. Or we are. Pump it. So, that was just the president calling, just wanted to know if we've entered a buy signal, if he should start pumping the market for us. I said, please, come on, come on. So far, the market is not breaking out the volume weighted average price. I mean, it is, but it's not really breaking out. I mean, it's just peaked over. Um, it's meh. It's aight. Can't say it's amazing, but it's aight. Yeah. Not a whole lot to say. All we can really do is just kind of keep our fingers crossed and hope we just keep pumping the market. That's pretty much it. How to stay away. So again, yeah, I am long 3x leverage UPRO, trying to get 3 times the return of the stock market for whatever gain it ends up putting on for today or over the next couple days or the next week or whatever, right? Or until I decide that my psychology is too weak and I close it and then miss out on gains or whatever dumb decision I may decide to make along the way of this long move. Who really knows? But ultimately, yeah, we just got 3x leverage ETF right now, trying to get 3x return of the market. I hope we have a Santa Claus rally. I hope we boom out. I hope we squeeze the shorts. Based off the way it's moving so far, we're not quite ready to squeeze the shorts out fully. Just is what it is. But like I said before, this is what we're battling the key volume trend of the sell signal operation. You can even see it there with anchored volume weighted out profile, right? We are at the largest volume shelf of this sell move. And it's us new bulls coming in over this past couple days that are trying to break them out. If we can get above that, wham, that's where we squeeze the market. It's as simple as that. Yeah, you get the point. It's pretty much that simple. We need markets to getteth overeth whatever I just said, and then we will Arnold pomp. So let's look at momentum. Momentum it's okay. Let me look at something else here. I gotta look at the advancing declining issues of the NASDAQ a little closer here. Because though we're not getting great participation from the Magnificent Seven, we might just be doing a broader market participation in the tech side of things. Which one is it? NASDAQ 100 advancing ADNDD issue difference. Yeah, it's not bad. We are doing a little bit more of a rally on some of the other issues in the NASDAQ, less of the Magnificent Seven, so that's fine. Oh, come on, Spy. You can do it. You're so close. Just break out the shorts and squeeze them. Hit them with the squeezy McPeasy. I'm going to take out the volume weighted profile stuff. I don't really need it for the moment. Oh. See, this is, that's another thing too, guys. This is why I developed the anchor volume weighted average price of previous and current buy signals and sell signals, is so that in situations like this, right, we can see that the market is positive over the 50 SMA. It's moving, but it's bumping its head on the volume weighted average price of the previous sell signal operation. Yeah, I mean, that's just, yeah, of course I, made up all these things to help me better understand price action, like obviously, but, just so you guys have an update of what is going on there. So just so we're all clear, right, the long target from the 50 SMA breakout is clearly up to the sell signal VWAP, and that is the maximum long distance for now until we break out, and then we go moon rip. If we don't break out the sell signal VWAP, we do not squeeze the short sellers out of their positions established from the top of this previous sell signal op. And that's pretty much what we need for a big boomer. On that note, I'm going to be right back. I'm going to go get some coffee. DTE energy. Oh, snap. Snap. Crackle. Pop. Pew. Yeah, let's take a look here. And stars to stay away. Oh no. Oh no. Style. No. Gross. Get off. Let's double check QQQ, because QQQ could also be doing something very similar. Might have already done its upper distribution squeeze move, so that would have been there. Yeah, this might have already done its move. Let's see, style. Yep. So right there. All right, so real quick. So you guys see how I'm explaining, like, hey, if we take out the sell signal VWAP, we're going to do what? We're going to squeeze the short sellers to the purple line right there. So that's our target of the sell signal VWAP breakout. All right. And you can at least see what I'm trying to say will happen via the QQQ. So let's just delete some of the stuff. If, ready? If is always the key word. If the market breaks out the sell signal VWAP, like here, it's going to squeeze to the purple. Ready? Let me show you on the QQQ. See that? See how the market broke down? 50 was bearish. Remain below VWAP, bearish. Not above VWAP, down. Then it starts to transition the 50, so it's getting positive, but not over the VWAP. Positive, not over the VWAP, squeeze shorts up to purple. Okay? Same thing here. Market below 50 SMA, below VWAP, below 50 SMA, below VWAP. Yesterday creeps over 50 SMA, but still below VWAP. VWAP knocks it down, chops it. Now we're back over 50 into VWAP. Not above VWAP, no squeeze of shorts. It's just a simple long over the 50, back to potential resistance. We need to get above that, just like you see here on the NASDAQ, in order to what I call kickstart the two-step Magoo. Two-step Magoo is, it's like you go for one move, you pull back for the two-step move. It's a two-step Magoo. But anyway, so as far as the long for the day, that's probably going to be our top until we break out. So I would say don't be extremely long bias here on the market just because it needs to legitimately break out before it's going to go more. So that's the danger is are you buying into a top or are you buying into a breakout? I'm not sure. That's why I would never suggest you should just be buying long right into the sell signal VWAP. That's why I was suggesting we should be long bias over the 50 SMA. So if you think about where I mentioned I was getting long, I also deleveraged and whatever, right? So I was suggesting, is that right? That seems wrong. Hold on, let me just double check. I might have done, is it? It is slightly off. No, it's right. So this is where I was suggesting we should be long, right? Well, number one, we're long to here for counter trend, but as far as like trend establishing up, we're long over this red line, right? So that's basically it right there. That's where I say we should be long for the 50 SMA transition up. Market goes up, we pull back into breakout VWAP, pull back into breakout VWAP, pull back into breakout VWAP. We're still holding breakout VWAP, etc. So as long as we're established over the 1 and the 5 minute volume weighted average price of the 50 SMA long operation, we're fine for the day. This market's not going to get smacked. All right, so we'll just, and I have to increase this a little bit. So this is kind of like what we would say is, as long as the market is over that box, the market's fine. Don't even worry about these little dips, right? Yeah. That's that. So we would only think the market is more like going to have a bigger drop off if it were to establish below here on the day now. Otherwise, this is all just rally up. Granted, we are not seeing the best participation from the Magnificent Seven. Or, just really in general, right? I mean, if you look at the Magnificent Seven, they're just basically flat. They're not helping the cause for the market to go up right now, which is kind of annoying, With those, if those were cranking and banking, the market would be absolutely slapping to the upside today. So far, this is just a nice long press with, in my opinion, not a ton of, I mean, I hate to say it, but there's not a ton of confirmation. So when there's actually a ton of confirmation. It's just we would like more momentum. We want more momentum, and we're just not getting it based off of market internals, right? And for markets to keep rallying strong, I mean, you need the underlying equities of the markets to be participating in a meaningful manner. That being said, we're still long biased. We're not going to cut our longs. Remember, all right, so what's the saying, right? Now, you can take profit and you could sell some and you can go back. You can do whatever you want. I do that all the time, right? I'll get in a long move. I'll take some money. I'll hold some. I might rebuy some. But as far as the long bias concept, right? What do we always say when we're in a buy signal, when we're in a buy move, and when the market is positive? What do you say to yourself? What do we always say? There's only 2 ways to 3 ways that we can shift to being bearish. So if we're in a buy move and the market's positive, right? When do we shift bearish? If the market goes below the 50 SMA or if the volatility indexes start to suggest to us that fear is coming back into the market. Or, but not really, or you can be bearish the market if all the market internals are bearish. But that third one is for more of like interim trading, right? The first two are more for structure, market analysis, and trading and investing, right? So number one, well, let's start with it. So number one, we're in a buy move today because we're over the 50 SMA, so we're trying to be long bias market participation. This market participation on the long side can last for as long as the market wants. 2 hours, an hour, 3 days, 2 weeks. When should we shift bias to bearish? After the buy move starts. So let's go through this. We're in a buy move. We're in a long, and we're going, when should we fully close, or when do we change our bias on the market? When the market goes into a selling operation. Well, when is that? When it's below the 50 SMA. Look at your chart. Is it below the 50 SMA? No, you're not in a selling operation. Number two, when the volatility indexes or volatility markets suggest to us that there are uncertainties or unforeseen risks coming into the market that could stop our buy signal. Do we see that? No. Okay, we remain long. Third, the market can go down in a buy signal without the first two being the case, but it has to be the market internals. Are the market internals all bearish and selling off in the day? Yes. Then you may expect to see the market go down even though it's in a positive trend. But if it's in a positive trend and the market internals are going down, they need to go down so much that it causes the VIX to break out or the market to break down. So it always comes back to the first two, which is if you're in a buy signal, we can be bearish or we can close fully if the market goes below the 50 SMA or volatility markets tell us to do so. Or number three, the market internals sell off so much that it causes the first two to take action or come into effect. So what does that mean for us? That means we're just long bias the stock market in. We're hoping this ends up turning into the old Santa Claus rally. And we hope our bags get pumped going into this next week. And we need to get over the sell signal VWAP of the previous selling operation to cause short sellers to squeeze themselves out. That will be the next big part of this long operation. It comes off the back of the previous market participation. You know, I certainly thought today was the day we were going to get over 15 viewers, but I don't know, man. That YouTube algo, it's like the buy and sell operations, but always on the no gain side. Always on the sell side. Oh, shnikes. Oh. Also, some changes we'll be making to some portfolios. Port Oreos is yeah, we're going to be looking at some more international markets, which I think we talked about a little bit yesterday. So I think over, because again, I was kind of thinking we might see a bear market or some sort of underperformance on the United States stock market starting in 2026, maybe lasting for 5 or 6 years. Hope not. But with that thought in mind, I am starting to position, somewhat in international and then also into some ETFs that give some downside protection on the market, so that if I am in fact correct and we do see a bear market or a recession or lower returns for the markets leading into 2026 and beyond for some extended period of time, then I would have less exposure to equities. And well, yeah, it is true, but not really. But it's an ETF that focuses on dividend yield in quality stocks, while using covered call strategies to increase income via options. So my upside will be capped on market rallies, but my performance would be better in sluggish to downturning moments than others' portfolios. So I'm basically positioning myself to still be risk on, but slightly more defensive leading into 2026. If I'm right, then sweet, I'm right, and I made the right play. If I'm wrong, then dang it, I guess I'll stop investing money. No, just is what it is, right? Another update, I am moving, I'm rebalancing some of my longer term portfolios from gold and silver. I'm still holding some, but I'm actually going to lock in some more gains on that. I mean, I've been holding gold and silver for 5 or 6 years now, it seems like, maybe 7. So for me, it's just, I'm looking at the euphoria of the market. I gotta, I'm trying to think more logically as averse to emotionally. I've held them for a long time. I like them. They've performed great, but will they keep performing? Probably. I'll probably sell too soon. But I'm still holding a good amount, and I'm going to be deleveraging gold and silver going forward, and rebalancing that into a slightly, well, I guess gold and silver would be very defensive. So I guess you could say I'm moving from defense to defense, but a different form of defense. But yeah, so that's all the updates. So if that makes sense to you, great. If it doesn't, then I guess just come back tomorrow and it'll probably eventually start making sense. But yeah, so we're just going to be deleveraging a little bit on some of those ports, and moving into some slightly defensive-ish, slightly not defensive-ish plays. And yeah, if the market goes down, then obviously we're all going to lose money. I'll just lose less. And if the market goes sideways, then everyone's not going to really make a gain, but I will. And if the market goes up, then I will make a gain, just not as significant as those that are fully invested directly into the market, unless other things perform well, but that probably wouldn't be the case. So we'll see who's right at the end of the day, the market or Connor, but then that would be the same as the market. So I don't know. We'll see. Hopefully I don't lose all my money. And if I do, then you see me out, standing on the corner, we've hit rock bottom. All right, so as you can see, we have taken the SPY back down to the box. It's on the screen. So as you can see, it's all going according to plan. There's nothing that's happening right now in the market that is not expected. So it's either hold and go, or we reset and most likely dump it back to there. Sometimes but I'm just going to say that, sometimes they don't do exactly that, but, that's pretty much it. If you were to just try to make things super simple, this is it, right? So that's our breakout. This is our pullback to volume trend. Either we hold and go, or we're going to reset market to there. Same pattern as yesterday. I have a feeling that, what do I have a feeling about? That it's not going to be so, damn it, gotta get my pipe and my hopium going. Yeah, so that's pretty much it. If I could just make it simple, that's it. But yeah, there you go. and again, we've covered all of this, exactly why we're not going up, why we're hitting resistance there. We're not getting enough long bias pressure from the Magnificent Seven. I mean, what more do you want? Do you want some kid to come on your YouTube stream and just draw arrows on a stock chart where the market's going to go? Like, what? You know what I mean? Like, who does that? Do you want someone just to come on a YouTube stream for free and be like, hey, stock market's going to go here, and then it goes there? Like, what? Like, how much more do you need? Yeah, but I was going to say, I don't think they're actually going to break the market down here straight to 66763, because we did that pattern yesterday. So I feel like today they're not going to do it, but we'll see. That's like starting to get like, too deep into thought sometimes, but something we might be seeing too is the 30-minute volume weighted average price reset. I could just imagine that's probably what we're doing too. Let's just see. That's another thing too. So it's just, just in general, we're just gotta stay long over that. Alrighty, baby, let's go. Let's go. We're still holding the 5-minute trend support, give or take, with a little shake and bake. With a little shake and a little steak. A little shake and a little quake. All I know is he's an absolute danger. He's a danger to the public. To the public eye, the man is dangerous. You can't see me. It's a dangerous. She's a bad. That's some good coffee right there, folks. That's some good coffee. You know what would make this coffee even better? If Santa Claus came to town, Like, how else am I supposed to get gifts, How else am I supposed to afford anything in life without Santa Claus coming and, delivering some money to my pocket, What am I supposed to do? Sell my shirts on eBay? I only got one left. Well, one, including this pullover. After that, I mean, naked. You don't want that. There's nothing exciting about seeing a little gardener snake slithering around, alright? We don't want that. All we want is the market to go up. But we're not getting enough overall participation from the market for that to happen. So what's happening is we basically are just doing a short-term long buy move up and still waiting for the market to hopefully establish a legitimate booming Ripper Magoo. Oh, man. So remember, guys, you see this? Look at this. This is a very useful thing to watch. It's a combined ticker of Apple, Microsoft, Amazon, Meta, Google, Nvidia, I think Tesla's in there, etc. They popped up, traded flat, down/sideways. It's going to be hard to keep the market rallying up when you don't have the stocks that pretty much control the entire market going up. Granted, I feel like it's the same 9-10 of you that watch this stream every single day, so arguably you know that. This information is best given to new investors, which for some reason doesn't seem like they find our channel. But maybe one day. Maybe one day. Yay! Did we just hold the 5-minute VWAP schmacker magooster magooster magooster? And we're getting a little popper magooster 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 magee? Good morning, everybody. Good morning. Happy Friday to you. Hopefully, you guys are going to have a great Christmas. And praise the Lord, baby Jesus. That's really the whole point of it. Don't forget that. It has nothing to do with the gifts that you get or give. You may not know it now, but in time, you will learn, or probably come to find, that someone already came here for you, and then literally gave his entire life for you. That's crazy. There is no one here on planet Earth other than your parents that would probably do that for you. And that's because the only person that would ever really do that for you is your parent or your father. Hence the point. So, don't forget it. So far, market's moving pretty good there. Like we said, just up over 5 minute, 1 minute VWAP. As long as that holds, market trend stays established, and we can turn this into a booming ripper-magoo. But again, we do need some better participation from the Magnificent Seven. We're kind of getting some green candles here. Again, I feel like they're just doing some scummy disguise, and they're trying to not make it so obvious. And then we're just going to wake up one day and say, like, bam, market's up. Santa Claus came and delivered you a new Xbox 360. Oh, gosh. Like to say, oh, come on, dude. All we got to do is get through that volume weighted average price. I mean, kind of. It's more to it than that. And personally, this is not the greatest looking pattern, if I don't say so myself. But then again, the market, it doesn't really matter. Like, what, like, your pattern, this, that. I mean, it does and it doesn't, but yeah, when I look at the way this is forming, it just seems not the perfect setup to go for the squeeze, but I've also seen crazier things. And then also, when it comes to like a holiday, sometimes the markets just do weird things, like rally like crazy. Again, very rarely do we see the markets do bad around holidays, I swear. And that's the thing, is a lot of people are like, oh, it's a half day, like, oh, market's going to be slow. Like, yeah, it might be slow, but sure enough, it's probably just going to grind straight up all day slowly, but it's going up, you know what I mean? So just whenever we start coming around Christmas, New Year's, Thanksgiving, I don't even care, President's Day, any holiday where the market's cut short, I rarely see them do bad. We're more likely to see those algorithmic force grinding long plays. So, IBIT looks solid for the day, then that must mean Bitcoin's having a good day. It is. Bitcoin's up 3.39%, so IBIT is going to do good. So, that's the way I look at that. I don't really look at like, oh, IBIT is Bitcoin's having a good day. So that's where I start. My analysis would always go to Bitcoin first, and then look at how the ETFs are reacting around Bitcoin's movements for the day. Which Bitcoin, with it being up 3%, let's see. Well, yeah. And remember, we just mentioned, we do not expect here on this channel that Bitcoin is going to be breaking down this previous low on like this go. So when we say this go, it means this move down. Right, this whole move down, that's considered the move down, right? This is the first attempt to break that previous low. This is the first initial oversold reaction reversal attempt. This is the attempt to continue the market down. This is the failed attempt to break the previous low. Now, this is kind of where I'd say people are more likely to get trapped and then pushed out like that. So, just in general, I see, has liquid weekly options. That is I should probably be looking into that. But anyways, yeah, so we do not expect here on this channel Bitcoin's breaking down. Realistically, you know, just below that previous low. I assume Bitcoin would go below this low only after it gets tested with all-time high daily or weekly resistance. So I think you could break down this previous low if the market were to reset, trap more longs, and then refuel a new short, which would be something like this up to here and then down, right? Or I would look at the weekly and I would say it's arguably up to here and then down, which if we did that would then create a head and shoulders pattern. Oh gosh. Oh man. You know what's crazy? Is I've now spent, what am I, 32? Oh boy. Oh. 32 years old. I think I got onto YouTube right around my 20s. Early 20s, 10 years ago now or so. Maybe not 10. At least 9, 8. Yeah, that's wild. Spent the better part of, at least 10 years, 8, 9, 10 years of my life basically just on YouTube looking at computer screens, and boy oh boy, would I have traded it for anything else? Probably not. Probably wouldn't have traded my life for anything else, honestly. It's a funny thing, you always look back and like, would I really change it? And honestly, for some, they probably would. So I guess I'm blessed in that regard to not want to have changed my life. There's probably some moments where I maybe would have changed how I did things, but it's been fun. It's been a lot of fun, and I cannot wait to see what the future holds, especially when it comes to the market, because I really like the way I'm starting to read the markets, and so yeah, I think the remainder of my investing career will only get better and be more fun. There's no update on the M1 portfolio because again it's such a low value that the change isn't going to be, it's what, a dollar. But the objective is, as we continue our stream with you every single day, that will grow, and then you guys can either join in, you could be a part of it, you don't have to do anything, don't do anything, watch it, see how it performs, use it as a case study, understand how I rebalance the portfolio, why and when, for what reasons, then the performance of how that thought process and rebalancing and strategy works, etc. Measure that against just a simple dollar cost average S&P strategy. Then you can see if trying to be smart actually works, or if it's pointless and it's a waste of your time, etc. While at the same time also pretty much, for lack of better words, predicting the stock market for you guys on a day-to-day basis. It's a good time. It really is. Really is. I haven't really even been trying to trade penny stocks over the past week and a half, 2 weeks, mainly because the moves that I've been seeing, I just don't really care for. The good ones that have taken place, I haven't been prepared for them. So again, I do not chase any stock. I don't chase any, literally, I very rarely chase a play. The only, ever, actually, so literally, just like you saw today, right? So just like today, we followed the market. So we follow the market every day. But in terms of waiting for a play, right? In terms of patience, if you will. In terms of patience, we waited, how long has it been for the specific buy moment? So we started yesterday talking about it, getting over the 50. That was 5 days in 23 hours. Move that to today when we really got over the 50 SMA. We've been waiting 6 days and arguably 22, 23 hours for the signal to get back long bias the market as it relates to simple moving average calculation algorithmic structure changes. We've been waiting 6 days and 6 days, almost 7 days, pretty much. Well, not really. It's like 6 days. Well, 6 days and 23 hours is pretty much 7 days, bud. So we'll just call it 7 days. We've been waiting, right? And why was I saying that? I don't remember. Oh, chasing moves. Yeah. So when it comes to penny stocks, literally, unless it's absolutely at a breakout level, then I just don't go long. Unless it's absolutely back testing a level, I usually don't go long. And the breakouts and the back tests happen so quickly, or they happen so sparsely. That sounds weird. Far and few between. That the likelihood you get that true limited risk entry and opportunity on a penny stock is a lot of times limited. And you have to be like, to really get into the groove of penny stocks, you need to be up at 4 in the morning every day with the broker that allows you to trade at 4 in the morning, etc. And that's how you create the best potential opportunity for yourself to see the full penny market cycle each day, each week, each month, because they love to manipulate them in the pre-market early or in the after hours, etc. So those breakouts are always going to be happening, usually when you're sleeping. And the back tests are normally going to be happening when you're sleeping. So they make it kind of challenging in that regard. And that took years to develop into that for sure. I used to chase penny stocks unknowingly, right? Like they'd be up, I'm like, oh, like there's still room, like it's not a true chase, but it's like, it's pretty much any time the market isn't breaking over the 50 SMA or isn't back testing, where it's the S&P 500, a large cap stock or a penny stock, you're chasing it to some degree. Yeah, they're just really, I just really haven't been talking about them because they're just, I don't know, I just haven't been liking the way they've been developing. I'm kind of waiting to see if the momentum really starts picking back up in that market before I really start to try to dabble again. Did pretty good all year long in our smaller account on those. Made plenty of good trades, met plenty of not good ones. But again, count's still going to be up close or over 30-something% on the year on the small account. So, yeah, hopefully that continues into next year, and hopefully we kickstart the winter with some strong penny stock momentum. That'll allow me to start kind of throwing some money around in some of those places and hopefully get some decent returns, etc., etc., etc. Yada, yada, yada. Oh, what do you know? The market internals are not performing in a way that's going to allow us to take the market up easily. Lame, lame, lame. Hilarious, hilarious, hilarious. Oh no. But just note that this is okay. This is okay that the market is pulling back. It actually could be setting up because basically when the market, well, never mind. Well, not never mind, but the I was gonna say that we look for back tests of the sell signal VWAP breakout. So we haven't done it on SPY, but we've done it on SPX. So the control would need to be on SPX, which is that, so ready, markets below, we break over, we pull back. If we don't go to the upper distribution, we then pull back to the VWAP. And then maybe we go, or it's going to fall apart. So that's the way I would now be kind of reading the SPX market. Is basically, it's got two options. It's either going up to 6,843 or it's pulling back to 6,806. Those are the two price points that I would assume the market's going to. And in my opinion, I mean, I don't really friggin' know, to be honest. I really don't. The market's not moving good enough to be extremely long bias. It's also not moving so bearish. I think we're just going to roll over and dump out super easy. But either way, the story would go is that our target on the downside right now is 6,807. Right? That's us assuming that at some point, right, this market fails, drops out, it's going to go to there. And then we may have the opportunity for a bounce off that. Right? So that's what I would look for next. Just in general. So this would be an interesting point to arguably be long bias at for a potential trade. And that's built off the back of the SPX holding its 30-minute volume weighted average price that it previously broke out. Now, the danger of that play is that if you look at the SPY is not currently over, right? So right now, I would say we're using the volume weighted average price of the S&P 500 to currently pull the market back, which could really just be leading to a support test on the SPX. So if you ask me, right now we're using resistance off the SPY, not SPX, and we're kind of using resistance off QQQ because QQQ already hit its upper distribution. So as we mentioned before, right, we have the sell move, we break over the VWAP, it then squeezes out to the upper distribution, which is right there. So we're using the upper distribution, completion of the long move on the QQQ to top QQQ. As a result, we're pulling things back a little bit, yada, yada, yada. Market's still in a positive move, still in a buy signal, no reason to cut your trade off, no reason to get out, etc., etc., etc. You get the point. Oh, gosh. Oh, excuse me. This is a good old yawn stretch. What was I going to do?
Yeah, my freaking nose keeps itching. Love getting into the winter. Jeez. Hmm. Yeah, we're still in the same position we've always been, which is just that pretty much the SPY is still holding over the 1 and the 5-minute volume weighted average price of today's breakout. So until that's really broken down, we're not going to see the market slide. But then when it does, we could maybe see markets go down to $677.63 or so. So 6, 7, so it'd be $1.37, give or take. Oh, man, what do you know? What you know? What you? Hold on 1 second, guys. I'll be right back. Well, anyways, ladies and gentlemen, we're going to hop off there. People just showed up at the house, got some other things to do here today. I hope you guys have a great weekend, and if you guys don't see my beautiful face next week because you're busy with family, then obviously enjoy that. Have a Merry Christmas. Make sure to praise the baby Lord Jesus, and we will see you back next week. Cheers.